All right, this article is coming from Yahoo Finance by way of tips ranks. Billionaire Steve Cohen snaps up these two strong buy stocks. Here's why you might want to ride his coattails. So, if you don't know, I love following the smart money as they have information you and I as retailers don't have. And typically, we as retailers are on the other side of their trade, right? Because trading is a zero sum game. So, the reason why they make the money and the reason why retailers don't make the money is because they are in the know. So let's get on with the article. Uh, so two stocks he bought recently. They're both in the biotech arena. Um, who is Steve Cohen? Well, he's a billionaire, number one. He's the chairman and CEO of global asset management firm Point72, um, with an estimated 17.5 billion under management. Um, no, sorry, hedge fund boasted a 27.2 billion in asset under management, and the firm has amassed, wow, close to 18 billion dollars over time. All right, so the first stock that he appears to have purchased is this Iovance Biotherapeutics. Is a clinical stage biotech company focused on the development of novel cancer immunotherapies. Um, they have a lead product in this Lifileucel. In March, the company announced that it had completed the Roland Biologics license application submission to the FDA based on positive clinical data. Um, Cohen must think that the data is going to come out and or approval is going to come out shortly. He opened a new position in the first quarter, purchasing almost 9 million shares, roughly $69 million. Uh, Now, with the submission, the FDA has 60 days to make a decision. There's an analyst, Benjamin Burnett, at Stifel, who anticipates update regarding the BLA by the end of this month. Due to the fact that there are no approved treatments for melanoma in this setting, Burnett is confident in the outcome. Okay, so upon the submission, the FDA has to get back to you in 60 days. However, because there's no readily treatments, looks like this is on a fast track. Burnett rates Iovance shares a buy and backed by a $21 price target, or 168% increase from current levels. So let's just go to the stock right now. So its target is $21. Stock is trading roughly at 750. Uh, Steve Cohen opened up the position in the first quarter, so it could have been anywhere between 550 and 650. All right, so let's just go right to the monthly chart. And it did reach a high back in late 2020 at about $52, but since then it's been just straight down, right? This is when we had helicopter money. This is when the helicopter money was taken away. All right, so let's just see. All right, so obviously we are back at levels of what we're going to call accumulation phase at $6. And all these wicks from $52 on down was just selling pressure. So it's going to be a hurdle for price to move higher. Can it break these levels? For sure. But it's going to have to be based on news, and maybe that news comes in the form of the FDA approving that particular drug. All right, let's go to the weekly chart. All right, so the first hurdle for price is going to be at the um, $8 level, where you have some selling pressure. You could say at 850, between 8 and 9. All right. Let's Let's mark this in orange. Let's look at that a bit more in detail on the daily chart. And this yellow line signifies the 200-day moving average, which is serving as resistance right now. As you can see, price couldn't even pierce the moving average and has pulled away, which coincides with this resistance at 825-ish. Just trying to figure out where the best levels to have gotten long at would have been. Just trying to look at volume. Right, volume has been picking up in the last couple of weeks to the upside. Could be another fake out like we had back in January. So the chart suggests you can't get long until we take out this resistance. At about, say, 825. Ideally, what you want to see is a close on the weekly chart above this level here to serve as confirmation that yes, price is going to go high. It may pull back, but yes, confirmation that price is going to go higher. All right, what's the next stock? Billionaire Steve Cohen bought Iovance Biotechnology, a commercial stage immunology company with a lofty aim of creating a world without infectious diseases. The company has a diverse pipeline of drug candidates that target a range of infectious diseases, including hepatitis B, influenza, HIV. Over the coming months, the company will report several important updates regarding the pipeline's activities. In the first quarter, Steve Cohen bought roughly 1.7 million shares. At the current price, this purchase is now worth 43 million. So there's an analyst at who shares Cohen's sentiments at H.C. Wainwright, Patrick, and he's laying out his bull case. They have a sufficient amount of cash to fund their clinical trials, and based on phase 2 readouts, it's a top pick for them for this year. This VAIR 2218 could generate aggregate revenues of 15 billion plus over the next 15 years, risk adjusted. This one candidate alone is worth $28. So Patrick is bullish on the stock. He has a price target of $100 over the next 12 months, which is roughly a $300% increase in current price. So typically in the pharma biotech company, reason why in general drugs so much because companies spend billions in funding and researching, and typically if a product comes on the market, it's they have exclusive rights to that product for roughly 20 years, so they look to get their payback at least by that time. So just reading about the two positions, I like Vir Biotechnology more just because they potentially have more candidates in their pipeline. They obviously have some cash, but let's look at the charts to confirm, and that is Vir. All right. Now, out of the two stocks, just from a technical standpoint, I lean on Iovance, just because prices are selling at a discount from the huge sell-off in 2020 when it was at 52, and this just looks kind of sideways, all right? But nevertheless, what you're trying to see. Again, helicopter money and then helicopter money taken away, right? Um, you know, when I look at the monthly chart, I just see a big band of resistance support at $22. But let's fine tune this a bit more. Here is the most recent support resistance at $32. All right, let's go to the weekly chart. And you can see sideways action since March of last year. All right, this was the levels. All right, best levels to get long for multiple reasons. Is at $17 for several reasons. One, you had this explosive move higher on high volume. This is also serving as support now, which was resistance when they IPO'd back in October of 2019. You also have evidence that it's a strong level, as price tried to get back to that level twice but could not. Right now price is in the middle, so it's equilibrium, meaning buyers and sellers are even. You have your imbalance at $32 where the sellers are in control. You have an imbalance down at 17 where the buyers are in control. So this is a no trade setup opportunity at the moment. If you're confident like Steve Cohen is, you can buy shares now. But from a technical standpoint, there's nothing going on. Potentially this would have been a level if price would have taken out the resistance. But again, the sellers are still in command until price, and if price can get down to the $17 level. Let me just look on the daily real quick, and all right, earnings, the stock crashed, it got filled. Earnings, the stock fell, got filled. This earnings, however, had a gap up, and this level has not gotten filled yet in terms of the gap fill. Yeah, that's about it. I don't like biotechs. I don't know enough about biotechs. But again, best way to invest is to look at what the smart money is doing. Thanks for watching. Subscribe. Please like the video.